What's happening, guys? I hope you're all good and well and you've all had a good weekend. So in this video I'm going to be talking about the DXY, which is the US dollar index, and essentially how we can utilize analyzing the chart and helping us frame up high probable trade ideas. Okay, because we're looking for a synchronization. Okay, and I'll tell you a little bit more of that as I explained. But essentially I'll tell you what the US dollar index is, and then how we can analyze it, okay, to help us frame up high probable setups and look for that correlation of a stronger dollar where we're perhaps trying to sell EU. Okay, so first of all, what is the DXY? Okay, so DXY, it's the US dollar index essentially. So in short, it measures the strength of the dollar. So if we're seeing a bullish DXY chart on the 4-hour or the daily, then we're likely seeing a bearish EU chart. That's because the EU chart, so the Euro USD and the DXY, they are an invert. Okay, so what do I mean by that? Well, if we look at EU on a daily to the left, okay, we're seeing overall on the daily we're putting structural high highs and high lows. If we look at the DXY, we're putting structural low lows and lower highs. Now, if I just invert my chart on EU, you can see now that they're correlated. Not exactly, they never will be, but they are an invert of each other. So, if we're seeing, for example, just thinking technically, if we're seeing daily highs or daily equal lows, or gaps of imbalance, or 4-hour, we can look at that in a moment. How we just analyze the high time frame system. We've had day-to-day system already. If that is in sync with our bias for the day, when we're looking at EU or GU, dollar traded correlated pairs, that's going to help us frame up higher probable trade ideas, because the higher time frame will always trump all. We know this, and understanding where the DX or where the dollar's perhaps going is going to give us a bit more of an edge and increase that win rate. Okay, so what is the DXY? So essentially, like I said, it is a strength. It's a measure of the strength of the US dollar. Now, it is an index, so it's relative to a basket of foreign currencies. Okay, yeah, the dollar relative foreign currencies, and those other currencies that they are compared to, they're weighted against, essentially, is the euro, the yen, the sterling, the CAD, Swedish krona, and CHF, the Swiss franc. Okay, so if we're seeing, like I say, a bullish DXY, that likely means that EU, GU are going to be going down. Okay, but on the other hand, if we're seeing, let's say, for example, USD CHF or USD JPY or USD CAD, if we're looking at those pairs and we've got a bullish DXY, then that means those pairs are going to be bullish. So again, this is going to help you have that alignment with, am I selling the euro because technically it makes sense, but am I selling the euro because it technically makes sense, as well as the dollar quite clearly heading towards a liquidity pool on the higher time frames, or for our EOF is in sync and it's quite clear that we've mitigated discount or premium and we're putting the next continuation leg. That's all we're doing. We're reading it the same way we are. So that's going to really help you. I'm always reviewing all of my performance in detail, and the last 2 or 3 months, I've only looked at the last 2 or 3 months because, like I say, I used to analyse it quite a lot, and it'd be a big part of my trading previously. But it's because it's an invert of EU. By looking at EU, I can pretty much tell you what the DXY is doing. Okay, but they don't always correlate. As in, when I say correlate, they don't always marry up, and that's perhaps when you're not going to have a high probable trade idea. Let's say, for example, like here. Okay, if we're just looking on daily time frame, right? Let's say we're selling from here, right? Wouldn't make sense. These equal highs right here. It's quite a risky play. There's no liquidity in the leg. We know that this high becomes vulnerable to being taken. It's exactly what we're seeing right now in EU, and it's a good example. So if I just put a ray line on these equal highs, if we look at EU, we can see we have no liquidity in the leg, and all we have to do is understand, look at the liquidity concept section in the community in the course. This then makes these lows vulnerable to being taken, the same as here. So if we look at the DXY and fast forward just a little bit, we can see on Thursday and Friday we ran daily buy side. Okay, so we could start to see a pullback now. Okay, now if we look at EU's not quite made it to the lows. However, this gives me confidence that we're more than likely going to run this low as liquidity. So I'll be very cautious taking counter trend buys on Monday and Tuesday, or at least until we take that low. Because again, it's looking where the liquidity is. We understand that now we've got some equal lows, exactly what we're seeing here. And this is a good indication that it's going to help us build that momentum, that high time frame momentum. What is the bias? What is likely the high time frames telling us? Looking at liquidity, looking at structure, and it's going to help us marry up that. If we get a sell set up before we take these lows, we could be part of that next leg that takes the low, like we've seen here. Okay, so utilizing where the high time frame liquidity is going to really help us. I'm going to start analyzing it in the morning and sharing it. So again, it's going to really help you because you'll be able to see my thought process. There'll be some annotations. I'm going to add a new channel. It'll just have a screenshot of the daily and the 4 hour. I wouldn't even pay attention to anything less than the 4 hour, guys. Again, we're only using the DXY to see if it marries up. Okay, we need to look at what's happening on our said pairs, marry it up with the DXY, and then make a decision whether it's a low probable or a high probable trade idea. But I'll be explaining that in my annotations until you can start to get comfortable with it yourself, peeps, as well. So what else can we do? So we can also look at the technicals of what we're doing on the 4 hour. So we go to the 4 hour on EU. Go back to the DXY, go to the 4H. And again, this is, you can add this into your morning routine. It won't take long. And it's going to really help you, again, understand where we can build those high probable trade ideas. Okay, so if we look here, for example, right, we have EU bearish. We're marking this up. See liquidity sweep on the lows, so we've got a reversal bias, neutral, but we want to be looking for buys first of all. We've swept the lows, so we've taken high time frame liquidity. The likelihood is we're going to be either heading for this imbalance here, or these highs, or even these equal highs, right? That's what moves the market liquidity, okay? It's like a magnet, remember that. So we'd be looking for buys here, technically, right, on EU. So make sure on the right date, third, cool. So if you were to analyze the DXY, we go, right, we've also got the same situation. We've had a sweep of the highs, okay? Mapping out our range and our highs and lows of the 4 hour like we would do technically with the high time frame system. Okay, so this would then give me confidence, or even more confidence in the setup now, because we can see that we've swept the highs. So we're likely to see a pullback. See what happens next. Okay, so we've had another candle, a pullback candle, go back to DXY, big pullback. Price was here. I'll be wanting to get back in this candle, right? We can see we drew a pullback. And again, what would I be looking at here? I'd be looking at the 4 hour, again, looking at where the liquidity is. There's no liquidity in the leg, and sometimes we see structural liquidity built, engineered, we say, like on the way down, and that that helps. But likely it's going to be the inducement that gets run. Yeah, the structural liquidity gets taken if there's none in that impulsive leg, like we see. So let's look at this low. and this high. Okay, so on EU, yes, we can look for sells here, but again, we've got equal highs here. This hasn't swept in liquidity. There's none in the leg. Imbalance above, nice buy to sell. There's loads of reasons for high prices. Okay, if we look at the DXY, no liquidity in the leg. We've got this low here, could be inducement for this, perhaps. We've got this large gap of imbalance down here. So these are the sort of things that you're going to be looking for. So again, I'll be quite happy to look for buys here. We've got a sweep bias, we've got reversal bias on a third. Cool. So let's see what happens. Okay, so we smash the lows. Let's see what happens. Take the highs more than likely. There goes the highs. Okay, let's just follow it. So we've got a new range on EU. Make it a bit bigger. The range is just those two candles. Okay, so got a sweep. Make sure on the same time, 7th. Okay, so we'd have the same bias here. Check the lows, one candle, retrace. Okay, so we've got range. This is just the one candle, so I'd keep the fractal high and the low is one candle, so the old range, the previous range remains the same. Cool. So if I'm looking at this, 7 AM, Monday 7th. Cool. So they're in sync. So again, what are we looking at here? Well, if we look at this POI, okay. Again, there's no liquidity in the leg. We've just swept sell side. The market is likely now to seek buy side. That's what happens. We seek buy side, market seeks sell side. Seek balance or liquidity. That's how the market is fueled. So we can look at this and go, right, well, we swept the low. Overall, we seem to be bullish, yeah, in structure. So liquidity being vulnerable, these highs being vulnerable to being swept, would then make me have even more confidence in shorting EU, because I'm looking at the same thing here. I'm looking at this range going, there's no liquidity in the impulsive leg, so this low becomes the liquidity, likely the next target for price action. The same here. So if I've got a sell set up in the EU, I'm going to be really confident that I'm backing the right currency. Okay, I'm backing a weaker euro because the dollar's gaining strength. It matches my technicals. So let's just play price forward. So let's go to here first. Right, so we see that high ran 1700. Okay. Okay, so we see the same low. We look here, it's exactly the same. Okay, there's no liquidity in the leg, so it takes the low. It's like a trap, yeah? So it's going to really help you understand where we can frame up higher probable trade ideas, because if we see conflicting ideas, i.e. if we look, say for example, we were here, let's go back. That was Tuesday the 8th. So let's say, for example, here, we can clearly see that the DXY, using our technicals and looking at liquidity, looking at imbalance, looking at structure, trend, is going to take the highs. So having a liquidity sweep bias, that would give us a neutral bias. So the plan would say, yeah, we can take buys, but we know it's not high probable. We've got lots of liquidity being built. We've taken liquidity. There's none in the leg here. This doesn't correlate with buys, so don't take a buy. So this is one of the ways we're going to help again, just it will increase your win rate. Just simply go back and just pick up like 3 or 4 setups, or even maybe a month or so, and just look at what the DXY looked at like during that same period of time. Invest a bit of time in it, and it's going to really help you. I'm going to start sharing my markup in the mornings again, and for New York, so we can see again, just to help you understand my thought process and how I like to feel that it gives me more confidence in the setup, because I want to be taking higher probable setups. We want to try and filter out as many losses that we possibly can in any edge to increase our win rate. That's learn the strategy, then make relative refinements to increase your win rate and your RR. Yeah. So I hope that sort of helps you understand a little bit about what the DXY is about, and again, just how we can use the daily, just to sort of mainly look at in areas of liquidity and overall sort of structure and momentum, and then the 4 hour using the same sort of technicals, looking at where the liquidity is, imbalance. That's going to help you, again, frame up higher probable trade ideas. Okay, I'm also looking at another pair, US dollar CHF. It's in that basket of foreign currencies, and it moves really well. I've talked about it on a couple of calls. We've covered a bit of price action. I broke down a few trades, so check out the last sort of weeks or so calls, or a couple of weeks calls probably. And it's a really great moving pair. Sometimes we see big corrective periods like you would do in any pair, but when it trends clean, it trends really well. And of course, it's going to help us again, because we're not just putting all of our bets on two dollar pairs such as EU and GU. Like if we see 2 sells and we're on the wrong side of the dollar strength, then that could be 2 losses. But if we see a setup on GU and a setup on EU and a setup on USD CHF or USD JPY, but that's more of an Asian pair to trade, guys. So for any of that work nights, it's a good pair to trade. But yeah, it's going to help, give us, I suppose, that bit of variation. We've not putting all of our bets in one direction on a weaker dollar. I've done a lot of testing with it with students on the call. I've got about 4 months of data so far, my first run, so I've still got quite a lot of data to get before I want to take it live. But it looks really good so far. Again, like I say, much better than USD JPY. I've looked at both, and it doesn't move as well as it does in kill zone, so not one for me. But yeah, again, I'll be sharing stuff in the mornings and the afternoons, so make sure you're checking out markups and breakdowns and all that sort of stuff, which is going to help you understand how we can sort of use the correlation or the inverted chart, or the understanding of the EU chart and the US dollar index, the DXY, being inverted. Like we can see here, I've just inverted EU, and it's now pretty much a carbon copy of what we see on the right, the DXY. So I hope that helps, guys, give you a bit more clarity. It really will help just tighten up and help us have a bit more confidence in sitting out average trade that may meet the technicals, but intuition, logic says the other. Any questions, as always, just drop me a DM, guys, and I'll catch you bright and early for London in the morning. See you later, peeps.